Good morning, good morning, good morning. Okay. Good morning, everyone. We are so thankful for you making time this morning. We're starting right on time, right on schedule. Welcome to Southern States Management Group's virtual day. There's a lot of education that board members need, and we are providing it for you by partnering with some industry experts today. If you will please look in the chat, I put a little disclaimer in there that we are recording this virtual day, and by being involved in the platform, you know that if you're asking questions, that those will be videotaped. The schedule of events is there as well. So please take a look at that to see what times you want to come in and come out of the sessions. And without further ado, I'd like to kick this off with our title presenters, right in KCPA. They have locations in New Smyrna, and in Brevard, and
Edgewater.
support and Edgewater,
Yeah, yeah. We're not in
and
Brevard yet.
support the entire state of Florida. Yes.
Mm,
Okay, good. And
that's true.
Barbara Reed is with us this morning to talk about the do's and don'ts for D and O's. We just ask that everyone please keep their video off, keep their voice off, and send questions in the chat directly to me. And if there's time, we can go over those questions with Barbara at the end. If not, Barbara's going to put in her information so that you can contact her for a consultation. And they will also be at the HOA and COA conference on April 2nd. So you can meet her live and in person. Good morning, Barbara.
Good morning. Thank you so much for that introduction, Diane, and for setting this up. It's so great to see so many people online today. So thank you for being here. I'm going to try to charge right into this because this is a program that we usually present in about 45 minutes. But obviously we've only got 30 here today. I'll try to present for about 20 and leave 10 minutes for your questions. So let's just dive right in. Now, looking at the title screen of the presentation, if it's not clear, D's and O's refers to directors and officers. And the first topic we're going to discuss is your fiduciary duty to the owners in your association. This applies to HOAs and condos. So basically, all of you as directors and officers owe a fiduciary duty to the organization. This means that you've got to discharge your duties in good faith with the care that a quote, ordinarily prudent person in a like position would exercise under the same circumstances and in a manner that you believe is in the best interests of the association. This is the provision of the Nonprofit Act, which does apply to all community associations. This is the provision that speaks to your fiduciary duty. Basically, this one gives you permission to rely on information from experts or other people that you reasonably believe to be competent to render the kind of advice you're relying on. You are not, however, acting in good faith if you have information that would make your reliance unreasonable. For example, if your attorney has given you an opinion and you know that the facts on which that opinion are based, or the information is not accurate, then it's not reasonable for you to rely on that opinion. If you know there's a reason that that opinion is flawed, so keep that in mind. Um, let's see. Now, here at the bottom, this provision says that a director is not liable for an action or a failure to take action if you are in compliance with the duties that I've just described. Generally speaking, fiduciary duty is going to be the foundation of any personal liability exposure to you as a director. It requires you to do your best. It doesn't require you to be perfect. Let's be honest. When a bunch of volunteers are running a corporation, mistakes are expected. Nobody expects you to be perfect. So The Florida Supreme Court has held that actual intentional wrongdoing in the form of fraud, self-dealing, unjust enrichment, or betrayal of trust, those kinds of things, is required in order for you to have personal liability. The Condo Act imposes very specific fiduciary duties on board members. You are specifically required to obtain and maintain adequate property insurance. You're required to complete a structural integrity reserve study and a milestone inspection report if your building is 3 stories or higher. Along with fiduciary duty goes the concept of conflict of interest. And this pertains to any activity that could reasonably be construed to be a conflict of interest. There are certain situations in which a true conflict of interest is presumed to exist, and that's when you as a director are directly doing business with the association, or when a business that you have an interest in is doing business with the association. In both circumstances, you're in a position to obtain a financial benefit by virtue of your membership on the board. This is the Condo Act statute pertaining to conflicts of interest. And basically, what it requires is full disclosure of the conflict of interest and approval of the transaction that gives rise to the conflict of interest. So, to disclose that conflict properly, you've got to attach contracts and documents related to the proposed activity or transaction to the board meeting agenda. That's the agenda for the meeting at which the board is going to consider the transaction. The potential conflict of interest needs to be disclosed and recorded in the meeting minutes. The disinterested board members are then going to vote to either approve or reject the transaction. That has to be done by 2/3 of the disinterested directors. If the transaction or activity is approved, that transaction is then going to be disclosed to the members at the next member meeting, whether it's regular or special. And then any member can make a motion to cancel the contract or the transaction, whatever it is that creates the conflict of interest. The members could then vote, a majority of the members could then vote to cancel it. Here we're looking at the nonprofit corporation provision that requires disclosure and approval by both the board of directors and the members that are entitled to vote on the issue. The contractor transaction could also be approved if it's simply fair and reasonable, even if it's not disclosed or approved. But this is the Nonprofit Corporation Act. You really need to be following whatever is more specific to your situation. So that's going to be Chapter 718 or Chapter 720. So this is the guidance that you should take away from this short part of the presentation. Do stay within your scope of authority when you're acting on behalf of the association. Do act in the association's best interest. Afford due process to your members, and disclose the truth about all material facts in any given transaction. That's the name of the game when it comes to conflicts of interest. Disclose, disclose, disclose. You can't go wrong if you disclose. Don't use your position for personal benefit. Don't ignore the statutory requirements related to your fiduciary duty, such as obtaining insurance, getting the structural integrity reserve study and the milestone inspection completed if you're in a condo. Don't accept kickbacks. Don't engage in a transaction that's going to benefit you personally without disclosing it. Criminal liability has been a hot topic recently because in the 2024 amendments to the Condo and the HOA Act, the legislature doubled down on things that are already crimes and made them, they became more specific about these particular crimes. So I'm going to run through them. Certain acts are going to result in criminal liability for board members. Those acts are, generally speaking, fraudulent voting activity. That's going to be a first-degree misdemeanor. Stealing or embezzling association funds, which of course was already a crime to begin with, it's called theft. That's going to be a misdemeanor or a felony depending on the amount involved. Destruction of records or refusing access to official records upon request of an owner is going to be a misdemeanor or a felony. Depends on the specific activity and the purpose of the destruction or refusal. The knowing solicitation, acceptance, or offer to accept a kickback is a third-degree felony. Doesn't seem to matter what the value of the kickback was. Use of an association debit card for an unauthorized expense is a misdemeanor or felony depending on the amount involved because it's considered theft. Debit cards have always been prohibited in community associations, but for some reason the legislature decided they need to make it clear that it is now a crime. It's theft if you're doing this. A board member who is charged with a crime related to association matters must be removed from office, and a vacancy will be declared, allowing the board to fill that spot by appointment if your documents allow for that. The board member must be reseated if the charges are resolved without a finding of guilt. Realistically speaking, because the wheels of justice move slowly, I don't know if you're ever going to be in a position to reseat someone who has been absolved of wrongdoing, but that's just my 2 cents. So I've created this slide just to show you exactly what the penalties are for first through third degree felonies and first through third degree misdemeanors. Hopefully you will never need to know this information. Civil liability. Negligence is probably the most common thing that you as a board member might be accused of. Negligence is simply the failure to use reasonable care, the same care that a prudent person would use under similar circumstances. As a general rule, you are not going to be held personally liable for negligent acts. As I discussed earlier, you have to engage in intentional wrongdoing in order to be held liable personally. There is a principle called the business judgment rule that protects the board's business judgment as long as the board had the power it purportedly exercised and acted in a reasonable manner when taking a certain action that's been challenged. Reasonable means that your decision or the action was not arbitrary, capricious, or made in bad faith. This rule basically prevents the finder of fact in court from using hindsight and second guessing what you did. So they are obligated to look at what you did in the context that you did it. So this allows you to rely on the opinion of an expert. Let's say you undertook repairs at the direction of an engineer. Your owners are challenging those repairs, or they're upset about the contract, whatever it is. If you relied on an expert to make a decision, you're entitled to do that. However, if you rely on someone that you believe is an expert that really isn't, let's say you've just got a board member who's knowledgeable about maybe construction or engineering, but they have no license, they don't have any other special training or expertise, you're not going to be protected by the business judgment rule. So when you're relying on someone, make sure it's someone who has the relevant training and experience, and usually it's going to be someone you have to pay for their expertise. The business judgment rule doesn't protect you from liability arising from violations of law that are inherently compatible with using good faith or honest judgment, like embezzling funds, intentional acts. It's also not going to protect you from breaking contractual obligations with third parties. The Condo Act provides that a director or officer can be held liable for monetary damages resulting from a breach of fiduciary duty under certain circumstances. These are the circumstances: when the breach of duty results in a violation of law, when you as a director or officer derive an improper personal benefit, either directly or indirectly, or when your breach constitutes recklessness or bad faith. So, your takeaway: do what the law and your documents authorize or what they require, act in a reasonable manner, perform your due diligence, and consult with unbiased experts who are qualified experts. Do not do what is not authorized or allowed by your governing documents. Don't assume the business judgment rule protects you from any decision you make. It only applies to certain decisions and actions. And don't forget to document the facts that support the action that you are taking or not taking. We'll talk about indemnification next. Basically, indemnification is, in this context, when a director seeks indemnification from the association, they're asking the association to compensate them for damages that they incurred by virtue of their service on the board. The association may indemnify the director if he or she acted in good faith. They were acting in a way that they reasonably believed was in the best interest of the association, or if they're in a criminal proceeding, or if they had no reason to believe that what they did was unlawful. Those are permissive indemnifications. The association doesn't have to do it, but they may. The association must indemnify a director if the director was completely successful in defending any kind of claim against the director. These are situations where the association absolutely cannot indemnify a director. If a judgment or other adjudication establishes that their acts were a violation of criminal law, a transaction from which the director or the officer derived an improper personal benefit. Again, that kind of gets us into the fraud, self-dealing, unjust enrichment arena. Or if the action was one of willful misconduct or conscious disregard for the best interests of the association. An important point: directors who are appointed by the developer are not entitled to indemnity. So if any of you are in a pre-turnover situation and the members are not in control of your association, be aware of that one. We'll talk a bit about insurance. I'll admit I'm just telling you what the law requires. You really need to talk to your insurance agent for more specific guidance on insurance coverage. These are the types of insurance coverage that associations generally have: general liability, protecting you from accidents in the common areas; errors and omission, protecting you from allegations that you have failed to perform your duties; directors and officers coverage protects you from claims made against you individually; and the umbrella coverage provides additional protection for things not covered by your other policies. There should be insurance for your association funds. The association in a condo is required to maintain insurance or a fidelity bond for all the people who are going to have control over the funds. And the amount of coverage has to cover the maximum amount of funds in anybody's custody at any given time. This is something that HOA members can waive. It's not required to have a fidelity bond in an HOA, but certainly a good idea. So, as it pertains to insurance, do talk to your insurance agent and maintain adequate insurance coverage. Don't ignore your statutory obligation to insure, and don't forget to talk to your agent. This is a real plug for agents here. So looking at my clock, it is 9:50, and I promised I'd give you about 10 minutes for Q&A. So I'm going to stop my presentation here. That's pretty much the overview of all of the things or the primary things that associations are going to run into. Diane, I'm going to let you take over as moderator.
Thank you. Okay, if anyone has any questions for Barbara, please go ahead and type them into the chat. And I learned a lot of
No,
things this
no
morning
questions.
already, Barbara. Thank you.
Oh, I covered it so thoroughly.
You
Nobody's any
did.
questions. Okay.
Any questions, please type it into the chat. We can try to unmute you, or I can unmute you, but it would probably be best if you just put it in the chat. Any questions for Barbara Reed this morning?
And that's
Any other
fine.
tips? Any other little nuggets you want to provide this morning, Barbara, since you covered everything and nobody has questions?
Oh gosh. The portion of my presentation that I skipped pertained to defamation. Some associations are interested in it, some aren't. Kind of depends on what's going on in your community. If anybody has any questions related to defamation, they can certainly contact me separately. I think, oh, hey, here's a question. Is it
Yeah.
recommended to have insurance on funds and those who handle funds? Yes, that is the fidelity bond I discussed towards the end there. In a condo, it's required. In an HOA, a majority of the members can vote to waive that requirement. I would recommend it for any association if you're handling funds. So,
Okay, good question.
thank you for your question.
What is the first step for owners to proceed in filing a complaint against its directors and owners?
So it depends on the nature of the complaint. There are certain things, if you're in a condo, you can file a complaint with the DBPR, the Department of Business and Professional Regulations. My understanding is that it's pretty easy to do. I've never filed a complaint with the DBPR. In other situations, if it's not something that DBPR handles, like in an HOA, for example, um, really, there's a pre-suit. If we're talking about litigation, there are pre-suit requirements, and an owner is going to have to demand pre-suit mediation with the association before they can file a lawsuit. And there are certain instances where arbitration applies as well. Here's a question. Will this presentation be made available to us later? It certainly can be. I can send it to Diane and she can pass it on.
And we will be posting this Zoom for everyone to also share with board members who may or may not have been able to attend this morning. We have another question here, Barbara. We live in a POA. So do you recommend the same items or the same insurance as an HOA?
Okay, POA, for those who don't know, is a property owners association. And property owners associations are generally considered HOAs under 720, but not always. So I would want to know what your particular circumstances are. But generally speaking, yeah, it's an HOA and you should follow HOA requirements.
Next question is, how do HOA directors handle issues of owners violating the 30-day minimum rental requirements, i.e. short-term Airbnb rentals for less than 30 days?
Ooh, it depends on what's in your documents. But you're entitled to equitable relief, meaning you can get an injunction to require someone to stop taking the rentals. Or you could pursue damages, but generally it's an injunction situation where you're going to require someone to do something. You can
Mhm.
also, before you get to that point, you can go through the enforcement tools that are available to you, like fining, suspension of use rights, those kinds of things.
Next question is, how would we find out about the POA being the same as an HOA?
So it really depends on the statutory definition. So, well, first, what I would say is look at your documents. It's going to be covered by Chapter 720 if your POA governs real property. If there are no condos in your association, you're going to be an HOA.
Okay. All right, everyone. I am going to put the registration for the April 2nd HOA and COA certification and conference, the link to register. If you haven't registered, go ahead and click that right now and get registered. Barbara Reed will be there, as well as many other associates from Wright and Casey. They are our title sponsor. They will be providing the HOA and COA certification that day. And it's a 2 hour certification that day. And then there'll be a virtual certification on April 9th, with more details to come on that. Wright and Casey has been a huge supporter of education in our community for years and years and years. And Southern States Management Group is just pleased and honored to be partners with you. There is no cost to the certification program. These great presenters and industry leaders have helped underwrite the program so that there is no cost to board members to attend. So certainly go over. One more question here before we pop on to the next. On the subject of short-term rentals, I've also had very good results by simply turning violations into local code enforcement divisions. Daytona Beach and many surrounding cities levy fines for violations. Anyone can report violations. So a nice a comment from one of our attendees. Also keep in mind, everyone, the DBPR, the Department of Business and Professional Regulation, will be at the conference. So they will have a booth there, and so they will be there to answer your questions. So certainly reach out to them when you're there as well. Barbara, anything else?
That's it. I look forward to seeing everyone at the conference on April 2nd and again on April 9th. And a big thank you to you, Diane, and Southern States Management Group, because we really enjoy partnering with you and you put on a great program.
Well, thank you so much, Barbara. I'll see you soon. Have a great rest of your
Take
day.
care, everyone.
Okay, everyone, for those of you who did not see me right at 9:30, if you scroll all the way to the top, we have our welcome to our virtual day and letting you know that we are recording. The schedule of events for the day is also there, so you can scroll up and see what topics are going to be presented at what times. I see Tara Stone popped in here. So Tara, if you would like to, if you have a presentation that you want to pop on, we would love to maybe just start a few minutes early.
Absolutely. Hi, everybody. My name is Tara Stone. I'm the CGO of Stone Building Solutions. We are a full service engineering firm that specializes in just helping condos. My background is insurance for 25 years, and we do engineering, which means the milestone inspections, RFPs, construction monitoring. But we do a little more than that. We actually help the associations with everything they need reporting and compliance. So that means the reserves, SIRS, traditionals, insurance evaluation appraisals, wind mitigation reports, any kind of balcony inspections. And the whole reason is because I came from the insurance background and I saw when associations would have a claim and we looked under the hood and saw that all these documents weren't consistent. There were errors in one that went on for decades and people wrote things in reports that actually hurt the association whenever they have a loss. So that's where the idea of Stone Building Solutions was born. We are all over the state of Florida and all over New Jersey as well, because I don't know if you guys know that New Jersey kind of copied all of Florida's laws in terms of structural inspections and reserves. And we're kind of seeing this sweep across the country. Georgia is following suit. Tennessee is following suit. Alabama's on the docket. Texas is on the docket. And the reason this is important, because if I'm sitting in your shoes, I'm thinking, okay, is this going to be like the fire protection system stuff that they just keep on kicking down the road forever? And it is absolutely not. The change is here. It's kind of happening independently. So I can talk about this kind of stuff for hours and hours on end. And I had a little presentation prepared in terms of enforcement, like what happens if we don't do this, right? What happens if we don't fund our SIRS, or what happens if we can't afford to do it? Like really what the penalties are and how the industry is looking and change. But before I get into that, if you guys have any questions regarding anything, reserves, engineering, appraisals, Wind mitigation reports, please pop it into the chat because I'll make sure to hit on that. Or if you want to just speak up and ask the question, that you can do that. This is full of free advice. I'll start with one I hear every day before I even get started. What happens if we don't like our structural integrity reserve study, that we don't believe in it? Do we still have to fund it? And the answer is, this is America. You don't have to take one opinion, right? If you go to a doctor and you don't like the doctor's opinion, you can always pay for another opinion, or you can go back to the reserve professional that did it and tried to talk to them. Nothing is saying that you have to follow it. What the law says is this year, when you vote on a budget, you have to take the ASERS that you have and put it into play so that you're starting that collection by January 1st, 2026, right? That's all the law says. It doesn't say you have to take your first SERS, your seventh revision, whatever it is. It's about working on a budget that works for you. Do you assist in getting condo approved by FHA? Well, we're going to talk a little bit. It's not specifically FHA, but we have these condo blacklists that are happening. So let me share my screen here. So these are everything we do and how you find us, stonebldg.com. So we're seeing on the news, right? It's a condo crisis. No one's going to come to Florida. How are we going to survive? And the bottom line is the change is here. It's happening independently of us, whether we like it or not. And there's no going back, and it gives rise to big stakes. So what are those big states? How exactly are they going to regulate structural integrity reserve studies and compliance? Well, there's really not condo police, right? We have the DBPR, and they're going to be at the Southern States training day. But when it comes to a problem, if you call there, it's a government organization. They're overworked, they're underfunded. They just got addition of like 30 new people approved, but it takes a long time to move anything through that process. So the bottom line is, if you have some people on your board saying, no, I don't want to do it, what are they going to do to me? So what we're seeing is we're seeing it enforced by a couple different industries. And the first one is insurance. So I actually reached out to Phil Massey. I don't know if you guys know him. He's one of the largest brokers in this Florida area. They have like 1,500 condominiums. And what he told me is that when they're going for renewal, we're in the middle of renewal season right now. If they have a structural integrity reserve study, great. They absolutely want to see it. In the years before, they could say, no, they don't have it yet. If they have a milestone report, they absolutely want to see it. If they're into a phase 2, it's not necessarily that they won't cover you. What the problem is they're looking for people to have a plan. Like, what exactly are you going to do about it? Are you going to sit on there? He's told me the biggest problem that they're having and the biggest fear from the insurance industry is the directors and officers liability portion, because they charge you a really small premium for that. Like what you're paying in property and wind insurance, it's these outrageous prices, but that director and officer's liability is really small. So now all of a sudden they're saying, wait a second, we don't want to take responsibility for an association that's not properly reserving, that's not properly funded, or hasn't done anything. So we're seeing carriers either back away, not offer coverage, or just absolutely decline coverage. So what does that mean? If you have less carriers that will cover you, then the price goes up and it keeps going up and up. So you end up paying more for insurance or not being able to get insurance. The next thing that happens is we're seeing the value of the units being affected because of saleability. So basically, we're hearing about this Fannie Mae blacklist and Freddie Mac, and they're no longer doing it. And we have these big assessments. So the bottom line is that an underwriter knows that you can afford, or whoever's going to buy your condo can afford a $350,000 condo. But they also know, because they've looked at all their income statements, that they cannot afford a $50,000 assessment. And banks do not want to be stuck holding the bag like they were in 2008. Let's remember 2008, right? Why did condos? I bought a condo that sold the year before in 2005 for $250,000. I bought a condo in South Orlando, nice complex on the lake in Lake Conway, for $37,000 in 2009. How was I able to do that? The problem is that no one could get financing for condos. And since no one was financing and no one was paying and people weren't paying the dues, what happened? It would only be cash buyers, and then you came in and everything was crazy and out of control. So banks are saying, listen, we're not going to play this game that we played before, getting stuck with all these condos. We're going to make sure that when we provide a loan, that the reserves are set, that we know what's coming in, and that they're not going to foreclose and walk away from this condo. So they were smart. It's the banks, right? They have a lot of power with our legislators. They actually put a carve out in the law. So this is in your documents, where before you just had to give these top four things. You know, you always had to give your bylaws and your article and everything like that. Now you have to provide the buyer, and more importantly than the buyer, the underwriter, the copy of the milestone, the copy of the structural integrity reserve study, and this really long document about frequently asked questions. And the reason they did that is because they want to look under the hood. They want to see exactly what's going on and what the credit score, because reserves are really the new credit score. If you had two associations and they were built at the exact same year, they were both built in 1992 by the same developer right across the street from each other. And this one was managed by Southern States. They do a great job. They do all the repairs. They've been funding it. They have $10 million in the bank. They just did a concrete restoration project 5 years ago. Things are good. But then this one over here has been self-managed, and they have $19,000 in the bank, and they should have done a concrete restoration project 8 years ago, and you see spalling all around. Prior to this law coming into play, the only thing that buyers got to see was an appraisal. An appraisal was based on location and how close they were to the pool and how nice the granite was in your kitchen and if you remodeled your bathroom. So people didn't really have that full vision of what they have today. So that's why that reserve study is in fact the new credit score, because a good reserve study, it's like you get on the good list instead of the blacklist, the bad list. You want to be on the white list, so to speak, right? So the bottom line is that they have went even further than putting in the law that they have to give it. The law says the contract that does not conform to the requirements of the paragraph that I just showed you above is voidable at the option of the purchaser prior to closing. It doesn't say within 10 days of signing it. It says you can be at the closing table, and if they find out that you didn't disclose or what you disclosed wasn't accurate or regulated, that buyer can get out of the contract. So now we see the problem with the insurance carriers, right? Let's imagine that happened. Let's imagine that I think I'm selling my condo because I'm moving to New York, right? And I'm selling my condo. I got a really good deal on it. I got $500,000 for this condo, and I paid $250 for it, in 2010. This is, life is great here. Now I bought my new condo in New York. I'm ready to go, and it gets to it. And at the final hour, the contract is voided because the person can't get the loan because the board made the decision not to follow the SIRS or wasn't compliant, or the people didn't want to fund, or there's any of these problems. Now we start the parade of horribles. Now all of a sudden they're suing the board, suing the property management company. It's your fault that now I have this condo in New York that I can't afford. It's your fault that I can't get anything. And this is why they don't want to offer a director and officer's liability policy, because they're going to be like, I don't want to be in the middle of all this fight. So they're really, really looking at these things. And this is going to be the teeth in the enforcement, not being able to get insurance or your condo being unfinanceable. And this is kind of the sad truth about it, right? Like it's tough love here. And the bottom line is that if you sit on the board and you say, listen, Betty over there in 2B, she's on a fixed income of retirement. They can't afford this. This is outrageous. This is a condo crisis. It's got too much. Then as the board, you have to be ready to take the responsibility that your value of your unit and everybody else in that association will go down. Because if you cannot get financing in a community, then all of a sudden the potential pool of buyers goes down and then values go down. So the good news is the other flip side is if we make the tough decisions and get on the right side of the reserves and think of it like a credit score and keep building our credit score, and then really be able to advertise like, look, we have proper reserves, we're doing preventative maintenance, we're on track. Now all of a sudden that can do the opposite effect and increase the value of your condos, because there's so many people that aren't on meetings like this and not going to education, and they are just sitting there and saying, well, what are they really going to do to me? So that's kind of the skinny of how it comes down. So can you assist in the getting a condo approved by the FHA? The answer to that, long story longer, right, is that having your reserves in order is the best way to make sure a bank can fund you in whatever loan program it is. Does that make sense, guys? What about some questions? Is any questions? I can't believe you have all these reserves and don't have any questions at all. Oh, thank you. Great info. All right, so let's talk a little bit then about capital improvement projects. Now, we got our structural integrity reserve study, and it says that we are going to, the engineer went out, said, hey, we have to do a painting of our building in, or concrete restoration and painting in 2026. So what does that mean? What happens if 2026 comes and I don't think that I have to do it, right? Or when do I need to start doing that? These are all about the capital improvement projects. So the budget of a reserve is a 25 or 30-year plan, and probably which not one thing is going to cost the exact dollar or be done at the exact same time in the study. So while the law says that you only have to do a structural integrity reserve study every 10 years, you should not think that I'm doing that every 10 years. You should be working with your reserve professional to update that yearly, because of the fact that it will be requested when a loan is bought and sold. And for insurance, you want it to reflect what's actually going on the property. And there might be a very good reason why you're doing it next year. You might be doing it in January instead of July or something like that. But you want that report to reflect what's actually happening. And you want to make sure that if you're not doing it, it's not because we don't want to pay for it. It's really that we're not doing it because it really doesn't need to be done. The whole idea of forcing people to do these structural integrity reserve studies is not to be like, oh my gosh, you absolutely have to paint your building at 7 years. It's the getting into that new world way of condo living that says that we need to pay for what we use as we're using it. As we're sitting here watching this webinar today, we're using the roof above us. We're using the paint on the outside of the building. Whether we're physically walking on it or not, it's being used up. So the whole idea is we pay for it as we go. And then when we get to the point where we need repairs, if there's money in the bank, it's a lot less stressful, right? The reason that repairs are delayed or delayed maintenance is typically not because people don't want to do it or they don't want to take care of their property, is they get to that point and then there's not enough money in the bank and they say, oh, why don't we wait till next year? Oh, why don't we get another bid? Or then all of a sudden, wait, I got a cousin over in Alabama. He can do a better deal on this. We'll get a cheaper solution. And that cheaper solution isn't the correct solutions that ends up costing the association more. So that's kind of the mentality behind it. And really what we're doing is trying to work with our associations and dial in and get it tighter and tighter so that it makes sense. Now, let's talk about what is on the docket for change coming up here. Just about 3 weeks ago, I was called to Tallahassee for the special committee for the Senate regarding these condominium changes. There was 5 of us that asked to present. It was the Florida Association of Realtors, someone from South Florida that does recertification, us to do milestones and reserve studies, an accountant, and an attorney. So we presented on, they said, well, what needs to be changed? What's working? What's not working? They had a lot of questions about like subsidence. And we're like, listen, this is not about one little small pocket down in Miami, Sunny Isles that's having subsidence. This is just about kind of delayed maintenance overall. One of the problems that we're having is that people don't understand the word fully funded because SIR says you must be fully funded. And as a reserve professional, we understand what fully funded means. It does not mean you need to have 100% of the money on day one and you have to have full. It means that you can use a pooled methodology and you just need to put enough money in the bank starting January 1st that whenever you come to that calendar on the date, that you have enough money in your account to do those repairs. So the House and Senate appear to be on board, and Vicky Lopez from the House put forth a bill this week earlier, and I was reading through and it's already touching on these things, is that they want to change the word to baseline funding. And in reserves, there's like kind of 3 different types of funding. And this is outlined in the reserve standards set by Community Association Institute. Baseline funding just means at no point do you go below $0 in your account, right? It's the base bottom line. Then there's threshold funding that says you want to keep enough of a window that makes sense at all times. So if you look at it on a percentage basis, anything under 30% funded is considered a little risky. Everything from 30 to 60 is, average. And then everything above 60%, 70% is excellent funding. So, and it's not just about the percentage too, because you have to look at the dollars in the bank. Like if you're 50% funded, but you have $10 million in the bank, that's too much money in the bank. That's a little crazy. You might then, maybe we drop it down to 20. You need to ebb and flow with what you have the projects predicted in the future. The whole idea is not to hoard money. It's just to save enough so that when the time comes that you have it. So that's kind of there is no definition, which is kind of what is perfect, what we tried to do, which is a little bit between threshold funding and baseline funding. And most seasoned reserve professionals do recommend a pooled methodology in a threshold style. However, if they do decide to adopt the term baseline funding, what that means is it gives more authority for the board to go ahead and be able to reduce those SIRS numbers, right? It might be worth coming to Stone Building Solutions and saying, okay, why don't you just redo my SIRS? But we want to be presented now with 2 options. We want to be presented with baseline, which we barely break above 0, and then a more threshold funding, which is more comfortable, because maybe what we do is we do baseline funding for the first 3 years to do just minimal enough to get it over, to get the people used to paying, to get the retired people that maybe can't afford to pay these kind of amounts some runway so they can figure out, hey, if I can't afford to live here, what do I do? That it's not all of a sudden overnight that these dues go way, way higher. So that looks like it's going to go through in the end of May. In June is when that will come into effect. So it's something to consider, is having that CSRS redone or re-looked at again before budget season, because you don't really need to vote your CSRS in until the end of the year, or whenever your budget meeting is, assuming that's like October, November, September, somewhere there. So it gives you some runway. But I can tell you that qualified reserve professionals like ourselves are still very busy with everything going on. So if you intend to do that, don't wait to the last hour, because there'll be a lot of people that want to do that at the last hour. All right, Thomas, can you touch on a condo building who has a current reserve study, but will be undergoing a large exterior structure modification this year, changing the brick facade to stucco exterior? The association will now have a reserve for painting where they did not have before. Will the items laid out in the reserve study drastically change, and how the association begins to fund those replacement costs from zero? So yes, when you do a big project, you 100%, million, billion% need to get with your reserve professional to make sure that that is updated, because you're resetting the clock, right? It's like, but you have more time. It doesn't mean you don't have to save. It means you need to start saving now. But the way pooled methodology works, and everybody thinks of reserves in component basis. And a component means that you have all these little buckets of money, and you're putting money in for the paint, you're putting money in for the structural repairs, and you're putting money in for the roof. And that's not the way pooled methodology works. And that's not really the way we work as humans. Like if you had a single family house, you wouldn't have 10 different savings account, right? And trying to put in enough so there's enough in at all times. You wouldn't do that. You would just have one savings account. You would save up for one thing, then you would let it go down, and you'd save back up and then do something else. It's ebbs and flows. And that's what pooled methodology is. So even though you're quote unquote starting to save for that paint and that next concrete restoration project today, you're not really, because you're really just buying time so you can save for other projects you need to do ahead of time. And then it gives you more of a runway to save for that paint whenever you need it another 10 years from now. So my biggest way to save you guys money, it sounds counterintuitive, but it's actually to spend money. When people paint at 11 or 12 years instead of 7 to 8 years, it severely increases the cost of the concrete restoration, right? Because the paint is really the only thing protecting the concrete. So a good paint job with a little bit of concrete restoration every 8 years, you will really avoid a major concrete restoration project. So if you have this, like your condo's been there for 25 years, 30 years, now all of a sudden you don't have a choice. You got to do this big concrete restoration. You live in Florida, it's just kind of the way the cookie crumbles. But after you do that, that's the perfect time to say, hey, we don't want to spend $5 million the next time. We don't want to wait 25 years and then have everything cost. And when you have that second round, it even gets a shorter time and gets more and more expensive, just like us as people, right? The older we get, it costs a little bit more to maintain. Same thing with buildings. So if you say, all right, we're going to be extremely proactive about this, every 7 years, we're going to paint our building. When that does, we're going to have our engineer check for any spalling, make sure we cut it out, make sure that the fasteners on our railings, because it's not the railings that are a problem. It's where the fasteners, where they meet the balcony. That's what's letting the water in. We're going to say, I don't care that everyone in the association or half of them has tile down that they paid for. We're going to make them rip the tile up, because the tile is the #1 killer of balconies. And we're going to put a proper waterproofing on, and we're going to spend that money. And because of that, we are not going to have to spend $5 million plus inflation turns to $8 million in another 15 years from now. So by spending and saving and doing preventative maintenance and working with a reserve company that's really thinking and considering about preventative maintenance and changing the mentality to that new world way of condo living and telling people when we come in, yeah, our paint costs more than everybody else because we do better. We do concrete restoration. We're doing it at 7 years. That's how you really save. You save because corrective maintenance is literally 30 times the cost of preventative maintenance. Are
We've
you in
got
favor?
two more questions in here, Tara, for you. How do you create a pooled methodology, and are you in favor of opposed to pulling the reserves?
Okay, so I am 100 billion million% in favor of pooled reserves, especially if you have a SERS. Let me tell you why. The reason that there was a push for component reserve funding prior is because it was a little bit safer, right? You were protected from having a rogue board come in and using all the money on the roof and say, oh, I want a rose garden in the front of our association. And they take the money out of the roof account and go spend it on a rose garden. So that's why they had that component methodology to make sure that that money was protected for that use. Now, with the structural integrity reserve study, if you have that, you already have protection because you can only use those money on structural items. And then the traditional items like the landscaping, the sign up front, the renovation of the clubhouse, the pavers around the pool, that gives the board flexibility that as things come up, that they can kind of do that rob Peter to pay Paul, which is the same way that anybody running a single family home would run or a business would run their accounts. So if you have component methodology now, reach out to your attorney. And I want to give you legal advice, but I'm going to kind of tell you from a higher perspective how it works. You can create a pooled fund without a vote, right? But the problem is, so your SERS can be pooled. You don't need a vote. It can just be the board vote on that. No membership vote. Your board can vote. We're going to create the pooled methodology. Great, no problem. But that account starts with zero. The only way that you can get the money from your components and move it into the pooled account was what you want to do, right? That takes a membership vote to do, which is 51%. And a lot of people say, well, we can't get a membership vote, 51%, everything else. A lot of times it's how you phrase the question. If you say, all right, we're starting our pooled account and it's going to take $560 per unit owner per month to fill that up. Or if you vote to transfer to a pooled methodology, it's only going to cost you $150 a month. Now, all of a sudden, it's a miracle. The votes are flying in, right? People are knocking on doors, getting votes because it makes sense. So a lot of times it's how you phrase the question. But it is literally like 30 to 40% cheaper if you put that, and sometimes it can be like 60 depending on where you are in the cycle if you're doing a pooled methodology. So if you're doing component and we're dealing with all these new laws and things that you have to fund for, this is something that you should start working on now before you get to budget season at the end of the year.
Tara, I love it so much. What a great presentation. Everyone, Tara Stone and Stone Building Solutions is going to be at the April 2nd HOA and COA conference. Please go see them. Also, we put contact information in the chat. So go ahead and pull that contact information for Tara and the team over at Stone Building Solutions. Tara, we're so thankful to have you. Thank you so much for being part of our education program. Anything else to add to share with the board members? You gave a lot, and it's information that I appreciate, and I know that the board members do as well.
Thanks for listening, guys. Have a wonderful day.
Thank you.
Bye.
Okay, everyone, we're going to just keep this show going. For those of you that are just joining us, the schedule of events is under the chat all the way at the top so you can see who is presenting and when. And we have Mr. Barry Ansbacher with us. Mr. Ansbacher is going to be discussing with us what to expect in the 2025 legislative process. So, Mr. Ansbacher, Barry, do we have you? We have you on. I see you. Thank you. If you want to go ahead and take the reins, we will ask that everyone put questions in the chat and we will answer those at the end. We will also send contact information for Ansbacher Law, and they too will be at the conference on April 2nd. Good morning, Barry. Thank you for being here.
Good morning. First, I want to thank the good folks at Southern States. We really enjoy working with them on some of the properties that they manage, and they're an excellent organization. We're always so thrilled to be part of any of their events, and we look forward to seeing all of you in person as well. So today what I'm going to talk about is legislative action. And I think it's important because so much of what you hear the speakers talk about are all these laws. And one of the things I hear people say is, what were they thinking up in Tallahassee? What's under the water? Don't they realize just how hard this is? And the answer is many times they don't, because they don't hear from you. And what we're going to do, I'm going to share my screen here, is one of the things that's really so important is getting involved in the process. And this is one of the things some people who aren't native to Florida may not realize is, but Florida has a 60-day session that's every year. And right now, people are in election year, so it starts in March. In non-election years, for example, next year, it'll start in January. But this is the part that many people don't realize, is well before the session starts, they begin with committee meetings. And what that means is by the time that 60 days starts, many of the bills have already been heard and debated in committee. And what I've learned from dealing with this, lobbying, participating as a citizen, as an attorney, is that your ability to input your thoughts into a bill, whether it's to vote against it, whether it's a bill that's necessary, whether it tweaks to the bill that there are unintended consequences, you will be able to have much better opportunity to get the ear of your legislator before March 4th, excuse me. So we're running down at the end of February, and it's going to get really hard to get their attention. But one of the things that I think is just wonderful is just how available the information is. When I worked out of the legislature back in the 80s, you could not find this information online. Now it is all there, and let's look at it. So if you want to know what bills may end up becoming the law, and for those of you who are old as I am, that Schoolhouse Rock, I'm just a bill sitting here on Capitol Hill, is how it works. In the Florida legislature, we have a Senate and we have a House. Every bill has to pass both the House and the Senate, and then it gets approved by the governor or vetoed. In addition, bills usually have what are called committee stops. So before they get on the floor of either House or Senate, they get referred to committees, and those committees either approve or disapprove the bill, or often they make amendments, which is where you have an opportunity to get involved. So in order to find the bills, what you do is you go here to flsenate.gov, and I'm going to the session. And then I go under here, and you can see that there's a Senate button and a House button, and I search either a Senate or a House bill, and I'm interested in the 2025 legislative session. And so I'm going to come in here, and this is where I can see all the bills that are filed. You can see there they are. There's 1,105 bills already filed in the legislature. And you can look at any of these bills and you can see which committees they're assigned to. So example, the first bill is going to go to the Judiciary Committee, the Appropriations Committee, and also the Appropriations Subcommittee. Now, if you want to track bills so you can see when they're going to be heard in a committee or what changes there are, there's a feature that you can click on here and log in, and you'll automatically get email updates if you create a free account. So you'll be able to see what happens just as it occurs. So if we go in here under the bill list, If you're interested in condos, all you have to do is type in 718, and you're going to see right now there are 8 bills which are filed that affect in some way or another condominiums. That means that there's a change that touches on chapter 718. Now, the big condo bill that I spoke to Senator Bradley has not been introduced yet. So there's going to be more bills introduced between now and March. If we look through here, you can see each of the bills, and the way it's written out is it'll tell you the title, it'll tell you which legislator filed the bill. So that's the person who is called running the bill. That is the person who you're going to want to contact amongst other people if you want to have input, and you can see what committee it's in. So for example, if you want to contact Representative Cassell, you can click on here and we can go to Representative Cassell. Here's our senator list, and we can contact our state senators that way. Or if we go over here to the Florida House, we can see our representatives this way. And you'll see their phone numbers, their contact information, and all the ways to get in touch with them and to lobby them, which just simply means expressing your point of view on a bill that is coming up. Now, if you want to know about the committees, that's the committee list. And what that means is these are the places where the bills go for debate and for amendment before they get to the full floor. So if something is going to the Community Affairs Committee, which is where most condo and HOA bills will go amongst other areas, you can look on here and we can see that the people who are going to be the most important for those bills that affect community affairs are going to be Senator McClain, Senator Fine, and these other legislators. And you can see their names on there. And you can contact any of these legislators and they'll show you their information. That's the past president of the Senate there. Likewise, if we go over to the House, we can see the committees in the House as well. And we can see which committees and who serves on those committees. So all this information is so valuable and it's available. Now let's switch over from to HOAs from condos, and I'm searching 720. And we can see here there's 7 bills that affect HOAs and condos. One is windstorm insurance and property insurance, and a number of other bills that affect. And I'll go through a couple of the highlights of these bills. Now, these bills may pass, they may not pass. If a bill does not pass both the House and the Senate and get approved by the governor and session runs out, then it has to start all over again next year. So the first one I want to talk to you about is what I consider a very bad bill. It's called House Bill 6005. And this bill, you can see, has been filed, and it's in the Civil Justice Committee, the Housing Ad Committee, the Judiciary, and you can see right now it's in the Civil Justice Subcommittee. That means that the first stop will be the House Civil Justice and Claims Subcommittee. Then it would go typically in order to Housing and then to Judiciary and then to the floor. If you want to see, is there a companion bill, you can see in the Senate that you have Senate Bill 586. What that means is instead of a bill having to go all the way to the House and then to the Senate and start over, if the same language passes a House bill and a Senate bill, then they can go immediately to the governor. Now, right now you can see that there is nothing scheduled in terms of it, but if you want to see when the committee is going to schedule a hearing, you'll generally get a couple days notice, and you do have to go to Tallahassee. But right now, if we know it's on the Civil Justice and Claims Subcommittee, and you want to express your view on this bill, you don't have to wait for it to be scheduled. You can see right now that Tracy Coster and the other representatives are on that committee. And any of these legislators are available to talk to, and you can send them an email or a phone call and say, hey, I have a concern about this bill that's coming before you, and these are the reasons why I don't support it and would ask you to vote against it. Obviously, if you support the bill, you could speak otherwise. And so this is how you get ahead of it. By the time it gets assigned to the committee and it's heard, oftentimes there's just not enough time for you to have your voice heard. So let's look at the bill itself. If I click here on bill text, it'll take me right there to the bill language, and I'll show you how it works. The way the bills are written are a strike through an add-on. So what this means is the current statute is right here. And the change that would be made is it would eliminate statute of repose. So what this means is if this bill becomes a law, then condominiums that turn over the statute of repose, meaning the claims period to bring a developer or engineer and hold them responsible in court, that time period could expire before turnover because the repose period is only 7 years and condominium turnover time is 7 years. So if this changes, it would have a significant adverse effect on Florida condominiums, in my opinion. So let's look at some other bills. Another bill we're looking at is Senate Bill 368. And here's a little trick. If the number ends in an even number, it's a Senate bill, and an odd number is a House bill. And we can see Senator Garcia introduced it, and there's a title, though I would tell you that these titles are generally so complex as to not necessarily be readable. If you look over here, you can see it's got 3 committee stops, and each one of those committees on where it's going to be heard. Now, what you'll also find is that when a bill gets a staff analysis, that's paid professionals that work for the Florida Senate, Florida House, they'll write up a report that explains in plain English, because most of your representatives and senators are not lawyers, what the bill does. Now, sometimes that may be skewed a little bit to favor or disfavor the bill, but if you look here under analysis, you can get a really good idea of at least what the bill is intended to do by the sponsor as analyzed by the committee. And if we go here to what the bill actually does, you can see the title is so hard to read. But if we scroll down here, we can see everything underlined is new. And you can see here what they're talking about is having a corruption investigation program, that is supposed to investigate crimes committed by condominium association directors or officers. And they're trying to have a special law enforcement pilot program because there is the belief, at least of the legislators introducing this bill, that the state attorneys really just don't want to deal with this issue. And you can see in here, they have that program that they're talking about. It also talks about expanding the ombudsman program and the election monitoring program that's been a longstanding feature of condominium law, and expanding that to the homeowner association world. Finally, and this is something that's very controversial amongst community association lawyers, they're talking about regulating recreational covenants. That's talking about where, in addition to having a declaration of covenants for a homeowners association, you might be in a mandatory district that you have to pay assessments in order to use a clubhouse or swimming pool or amenities that are not owned by the HOA. And if you don't pay them, you may actually lose your home. And this is something that they're talking about, one, authorizing it in the first instance and then regulating it. Right now, there's a certain belief amongst a lot of managers and community association lawyers that these are just a terrible idea, because you would be required to pay money to an organization, meaning the developer's entity, where you have no vote, you have no representation, and essentially it's a tax, because if you don't pay it, you could lose your home. So while this bill does some good things, in my opinion, this portion of the bill, it sounds innocuous enough about regulating recreational covenants, but it could have a very serious impact on homeowners that are having to pay to a non-representative body. They can't vote them out of office, and you have no say-so on it. Next, I want to look at House Bill 913, and we can see this bill. And House Bill 913 shows that this is something that we thought was coming for a long time. Excuse me, you go back to 913. this is one that talks about the provisions of the Condo Act and regulating that. I jumped ahead. So if we come back over here to the bill text, I'll open that up. And you can see over here the provisions of this bill. And we're scrolling down from here, and you can see these are the first changes right here. And this is talking about how to change the size of a condominium unit and the vote required. It talks about insurance requirements for a condominium. And I think there's one more set of changes here. Here we go. And here also, it talks about potentially being removed from office or criminal acts of being a condominium director or manager. So you can see it does quite a lot of things. And this is one which is coming through. And finally, this is something that a lot of people are dealing with in my communities that I work with. It talks about how condominiums can borrow money and do special assessments in order to manage their CSRS and milestones obligations. So jumping to just a couple more bills, Senate Bill 983 is a bill that does what often happens. Typically, you'll see a law that exists in the condominium side of things, and then several years or sometimes a decade later, they'll even it up and they'll pass a similar law for HOAs and vice versa. So here, I predicted this a long time ago. House Bill 983, if it becomes law, takes the election process that condominiums follow, where you don't have election in person and you don't have it by proxy, but you have it by secret ballot or by online, and it adopts that same process for HOAs. So the same condominium process that 60 days before the election, you'll have a notice of intent to run, and then people submit their nomination for themselves to be a candidate, and then people submit the ballots if there's more people running than seats. So this is a feature that some modern homeowner associations already have implemented, but for historic associations, it would adopt that same, what I consider very clean condominium form of election in there for HOAs. So that's just a preview of the bills that are in line now, and this will change. I know for a fact that Senator Bradley's, what we call the big bill, is going to be coming through, and there will certainly be some attempts to tweak the milestone CSRS process and make it a little less onerous, though the bill has not been released yet and publicly filed in what we would call bill drafting. So a senator or representative has an idea, they write it up, it goes to bill drafting, that goes through and makes sure it's technically in the right form. And then once it's introduced, it becomes a public record. So that's everything I have to share. All these bills are going to be going through the process, and we will find out after the end of April, really May, June, which bills get through the system and which ones the governor signs and which one the governor vetoes. And our firm will be offering legislative updates to explain what happened. But my suggestion, everybody, is don't just wait to find out what happened. Get involved, send an email, make a phone call, go visit your legislator and have input. Because the legislators always hear from homeowners who are disgruntled and complain about the board and complain about the managers and complain about the lawyers. And so they only hear that point of view so often. And unless they hear from citizens, from homeowners that are trying to make it work as volunteers and try and protect your community values, they're not hearing the full story. And so often the laws they pass have very bad consequences for your ability to govern your community. And the opportunity to speak up is not when we tell you what happened, but while they're still cooking in the kitchen. So thank you so much again for listening to me. I look forward to everybody in April. And if there's some questions, I'm certainly happy to answer them.
Barry, that's some sound advice. Thank you so much for walking us through all of that. Okay, everyone, if you do have questions, please throw them in the chat. Again, Ansbacher Law will be one of the presenters on April 2nd at our HOA COA certification and conference at the Museum of Arts and Sciences. So we look forward to hearing from you there. They will also be exhibitors, so you'll be able to go up to the booth and talk to them directly as well. And we're very thankful for that, Barry. Thank you for you and your team's support. Okay, anyone, we've got about 10 minutes. Let's take advantage of Barry's time.
I'm happy to take questions if you had some matters that go outside the upcoming bills and laws. If they're out there, I'm certainly happy to give it my best shot as far as that goes. But
Thank you, Barry. You might be off the hook,
okay.
but we'll give it a few minutes. Sometimes it takes a little bit of time to type things out. And then I'm going to put Barry's contact information for his firm on the chat so that you can save that in your files so that you're able to contact his team for any more information that you need. This is their website and you can find more information about them there. All right, Barry, I don't want to keep you for 10 minutes because I know your time is valuable. So thank you. Thank you very much.
Thank you, everybody. We appreciate it. We look forward to seeing hopefully most of you, if not all of you, in person at the Southern States event. Take care.
Thanks, Barry. Have a good rest of your day. Okay, everyone, the next topic will be provided by Insurance Office of America. It's Mike Moore is gonna discuss knowing your emergency response company before you need them and knowing if a claim should be submitted or not. That will start at 11 a.m. So if you wanna take a break and come back at 11 a.m., this would be the time to do that. This is our last presenter before we break for lunch. I will be putting everyone in the waiting room until 1:30. So you can either keep your computer on or you can log out and then just go back to the link that you registered with this morning and click on that to join back at 1:30. If anyone has any questions right now about the upcoming conference or the rest of the day, I'd be happy to take questions. We also have a number of Southern States Management employees on here. If there are any questions that you want to throw into the chat that are pertinent for all to potentially learn from today. If not, we'll just wait until 11 a.m. Thank you, everyone. Appreciate your time. Okay, we have a quick question. The question is, if I haven't completed the certification yet, will the CE credits from today still count? The board, the HOA and COA board certification, that certification will be done on April 2nd in person during the event. As far as CE credits today, the DBPR it's very interesting how they've rolled out the board member requirements. We have record of you being here, but and learning these different topics. So if there's ever a question of you needing to show that you had 30 minutes of continuing education, you can certainly contact us to show that you were here. But the certification for board members, for HOA and COA board members, will be on April 2nd at the Museum of Arts and Sciences. And then there's a question, where can I get more information on the pooled method? I believe that was the question for Stone Building Solutions. And Stone Building Solutions, I will put their website down for everybody. That would be a presenter direct topic. Is it possible to access these recorded presentations to show other board members? Of course, we will be sending out this Zoom recording to our database. And so you will be receiving it, and we would love for you to forward it on to other board members and residents and CAMs, anyone that you feel would benefit from the continuing education credits here, or the continuing education information rather. Hey everybody, it's 11 a.m. and I am not seeing the next presenter pop on here. I have messaged and called, so we'll just give about 5 more minutes. I am going to put into the chat the link for the certification that's happening in person on April 2nd, Wednesday, April 2nd at the Museum of Arts and Sciences. We already have about 200 board members registered. If you have registered, emails went out this morning that talked about parking and food and what to expect the morning of and the day of. So be looking for that email. If you don't see an email and you registered, please check your spam. And then if you don't see it in your spam, please go ahead and register again. Sometimes technology is in our favor and sometimes it is not. This afternoon session will begin at 1:30 with Brown and Brown Insurance discussing the insurance underwriting process and changes. And then at 2 p.m. is the Florida Community Association Insurance, and they will be talking about the state of the Florida insurance market, how to prepare for your renewal, how to reduce premiums, and tips for navigating coverage. So we've got a insurance heavy topics coming your way. If I don't hear back from this next presenter by 11:05, I'm not going to ask to hold your time, and then we'll just put everybody in a waiting room, and then we will get back together, convey at 1:30 p.m. Again, you can either just keep your computer on or you can use your registration link from this morning to join again. And we appreciate everyone being here and your desire to learn more about being the best board member you can be. For the HOA certification and conference on April 2nd, we're excited to have Hyatt Brown discussing their contributions to the Daytona Beach and Volusia County area, the economic growth that they're involved with, and what their vision is for the future. That will kick off right at 8:45, 9 a.m. The doors for the conference will open at 7 a.m. We'll have breakfast ready for you, coffee station ready for you. There will be 67 exhibitors, industry professionals. They're ready to help you with your requests for proposals, your RFPs, any bids. We have industry leaders from all sectors of association management that will be in attendance as exhibitors. So we highly recommend that you come as early as you can, get some nice breakfast, and walk around and learn a little bit about each of the exhibitors that will be there that day. It's a jam-packed day full of education, and we'll be happy to host you for the day and provide you with this annual education that Southern States does. I am not seeing Mike come in. And I don't want to hold everybody here. So I'm going to go ahead and call it to not disrespect your time. I hope to see everybody back at 1:30. I'm going to put everybody in the waiting room. And thank you for your time. We appreciate your understanding and your patience with today. I'm gonna we are now recording. Welcome back to our virtual day. Just so everyone knows, we will be recording this session so that we can share with others. So please be advised of that. Okay, again, I'm Diane Michael, Outreach Coordinator and Education Coordinator for Southern States Management Group. Thank you everyone for participating this morning. We had some great presenters that helped to talk about all things associations. This afternoon, we have two wonderful industry leaders, and we are insurance focused this afternoon. So I am going to put the agenda for this afternoon in the chat right now as Austin Brownlee joins us from Brown & Brown here. For those of you that have questions, we ask that you put it in the chat so that I can facilitate that with the presenters. And we'll go ahead and kick it off. If you are not muted, please go ahead and mute yourselves. And Austin, do we have you here? Yes. Welcome, Austin Brownlee with Brown & Brown Insurance.
I'm trying to get on. Are you able to hear me?
I can hear you, and I just activated.
We're trying to get the video. We're trying to get the video to work.
There you
Give me just
go.
one.
We
There
see
we
you.
go. Close that. Hold on. It's still on this one. Hold on one sec. There you go. There we go.
Perfect. Thank you, guys.
Alrighty. Thanks, Diane. How's it going? So I missed your opening, so we were trying to. We just screwed up here. Chris.
I just wanted to let everyone know to wait for or to put questions for you towards the end so that you guys can, go over your section, and then we will take questions towards the end.
Okay, excellent. So we appreciate the time to talk today. My name is Austin with Brown & Brown. This is Mike Pyle. And the message today, what we want to talk about is the condo insurance marketplace, specifically the property market and some of the changes that are taking place. I do want to let everybody know that on April 9th, we will be doing an in-depth in-person seminar here at Brown & Brown on the 9th for about an hour and a half. We'll go in detail in all the things that are changing in the marketplace. The good news right now is that we're seeing a softening in the marketplace that has to do with a little bit of capacity, more capacity coming into the marketplace. But we want to talk about some of the underwriting changes, some of the things that are different this year that we'll be seeing. I'll let Mike talk about some of those items, but yeah, would love to also answer. I know there's probably a lot of questions out there, so we want to address some of the questions that you all have when it comes to the insurance for the condo marketplace, which I'm sure there are a lot of questions. So Mike, why don't you talk a little bit about some of the changes that we're seeing in the marketplace right now?
Yeah, good afternoon. My name is Mike Pyle. I've been here with Brown & Brown for about 18 years now, and definitely had a concentration in the condo insurance industry. Over the past couple of years, for any of the board members that have dealt with the insurance side, there's been a lot of scrutiny on accounts with the roof age and with updates just in general. And that's been probably the biggest thing that we have been trying to get in front of with all of our association clients. And honestly, it comes down to the old days of an appraisal, an SOV, a statement of values, and some applications. And now it's trying to really separate yourself and put the best overall submission together for these underwriters. But as Austin said, with the market, changes, a lot of people went from, typically your property insurance policy is going to be a vast majority of your spend, maybe 80, 90% of your overall spend. And those policies, had increased substantially over the years, the rates. But we've had a ton of success recently, bringing substantial improvements year over year on pricing, but it was also about the coverage, deductibles, the sublimits. We're finding a ton of holes and deficiencies within some of these association programs, and again, trying to just put together the best overall submission, and bringing back a lot of our programs, with some of them being more exclusive, are able to provide full limits on these things. And if you go on an account and ultimately change an expiring program from 3 carriers down to 1, there's typically going to be automatic savings right there and improvements year over year. So as Austin said, we have a large seminar coming up, and we're going to be diving into a lot of that detail, with much more information, talking about those different items there. But we're happy to answer any questions that people may have.
Yeah, if you know the chat's there, so if anybody has a question, we can look at the chat and address any specific questions that you have. But I would say overall, you should expect to see, from a price saving standpoint, a minimum of 10% plus this year in the marketplace. So as you get down to the renewal process, I mean, that's really what we're trying to anticipate with the marketplace, and some additional capacity coming into the marketplace. And then if you have the, as Mike alluded to, the right submission and have all the answers to the underwriters, you should be able to, start seeing some alleviation on your pricing this year when it comes to property, just because of the state of the marketplace. Now, that's not a guarantee; it's all circumstantial. But we're very bullish on the fact, and have already delivered some renewal decreases this year when it comes to the property market on condos. The roof, as Mike talked about, is going to continue to play a major factor as far as your age of the roof, updates on the roof. So any of you all that are thinking about doing anything with the roof, depending on your age, that is going to play a significant part in the renewal process, as well as some other things.
In that roofing side, I think there's a lot of misconceptions there, because in some recent accounts that we've taken over that have had some older roofs, but they've had a lot of work done to them and studies done on them. And there are some carriers, it doesn't matter what you can show them about your 15 or 20-year-old roof in any report. A Citizens is always going to have a year. That's all I care about, is what the year is of that replacement. But there's other carriers, and as we work on accounts, and I've had some associations, they're like, I've never really had as many questions come to us in the past that you're asking about the roof. And it's just that we take kind of the extra step of trying to get as much information as possible to kind of highlight these associations the best way possible. And honestly, not any of these associations in which we've been involved in they've been annoyed by the questions that are being asked. They actually appreciate that, hey, if we've been asked these questions in the past and been able to provide this information, would it have changed our results? But some of these associations have seen 20, 30% reductions and improvements in the coverage year over year. And one thing that we typically have done with a lot of them have been a coverage analysis, and allowing us to kind of dive into your policies. If you have 8, 9 lines of coverage, you probably have 1,000 pages worth of insurance policies that ultimately you're not going to be able to go through in detail. And that's what we've done, is do those presentations. And there are some situations, rare, but where we come back and say, honestly, your insurance program is placed perfectly and designed the way it should be, and there's really nothing we can do on that side of things. So we're very transparent in the process, and try to obviously help those that there are significant concerns. So something we're certainly available to do for anybody that has any interest in it.
Yeah, it's some of the things to highlight from things we look for and find is, Mike mentioned sublimits. You have your policy for your total insured value of your building, but then they will sublimit certain things like wind-driven rain. you may have noticed, or any type of water damage type limitations. So we want to look at those limitations and see if we can't improve upon those. Make sure that you're aware that those are there. Also, insurance companies will put safeguards on, stating that if certain things haven't been done, they may change the replacement value of your roof from replacement cost to actual cash value. So we want to make sure that we're understanding what's in your policy, that you understand what's in the policy. And like we said, there's a lot of changes taking place, and you need to be aware of everything that's inside that policy, other than just the total limit of the insured value. And again, April 9th, we will be doing a 1 hour plus seminar on all these in detail. We'll have a PowerPoint presentation. We'll highlight all these things. The other thing to think about, we could talk briefly on it, is subrogation. That's a big thing right now when you talk about the condo, who's responsible for a claim. If something happens, is it being pushed to the unit owners? Is the unit owners, if they're negligent, is their policy pushing it to the association? We can go into detail on how that is playing out in the marketplace and what things are being done. But again, if a unit owner is negligent or has problems in their unit, they should be responsible for their unit, and vice versa if the association has issues. But the insurance companies are looking for ways to push that to somebody else to pay that claim. So that can create angst within an association and your unit owners if you don't clearly understand how those things work and how the policies are written. You want to comment on that?
Yeah, and I would say that, God forbid you have to use those policies and deal with some insurance claims. I'm still kind of shocked that in some situations, the adjusting firms are oftentimes there's a third party adjuster on a general liability claim that is outside of the state of Florida and doesn't understand some of the changes. So our side of things is trying to stay on top of these statutes and being involved in the claims process. If you're just, having an issue and having a claim submitted and dealing with an adjuster, they might actually be giving some incorrect information. An insurance agent needs not to just be there for the presentation and buying the policies. They need to be there for everything that's involved in that process throughout the year, and that includes the claims handling process. So something that we try to educate our clients on as much as possible, and how things work and how to handle these things. But definitely a lot of changes that go on, some that are actually very, very favorable for the associations themselves, strategically favorable, like that subrogation deal that we're well versed in and we understand, and we're there during a claim situation in order to definitely point out if an adjuster is not responding the way it should be handled.
So we'll pause for a quick minute. If there's any questions that anybody directly has, we'd love to interact with the audience to answer any questions that you may have.
Thank you, guys. Okay, everyone, this is your time to ask the questions. Put them in the chat, please, and then that way everybody can see. Also, everyone, we are going to have an insurance panel. Oh, we have a question. What is the right submission that you mentioned for the underwriters?
So I mentioned that briefly, like, again, a typical submission, what a carrier is asking for is loss runs, a statement of values, an appraisal. There might be some applications there, but I think in order, these underwriters are inundated with submissions, right? They're getting stuff in from various associations, and some of these underwriters too, these carriers have double, triple the amount of submissions they're getting, because these condos have gone into what's called a layered approach, where multiple carriers stack on top of each other to ensure an overall risk. and you want to essentially put together the best overall submission showing, the capital expenditures, the proactive approach of handling updates on these associations. You want that your submission to stand out from the basic. So if there is any type of loss activity, it's explaining those and not waiting for an adjuster to ask a question about it. Talking about the milestones and the SIRs and the upcoming plans. One very frustrating part about our world is that carriers want you to be updated, but they don't necessarily, I'm talking about property insurance, they don't necessarily want to be on your account while you're going through a large concrete restoration or waterproofing project. So we're working with our underwriting partners to provide as much information about that project that's coming up or being planned as possible. So again, they look at, certain types of updates, and we are strategically trying to position it the best for the association. And it does come with some questions for the associations there, but turning it around from a carrier saying, hey, we'd love to write this account once they're done with the project, to saying, we appreciate that this association is proactively investing into the community and trying to mitigate and get in front of some of these items, prior to that renewal time. And as long as there's communication, the last thing you want to do is write an account and not tell them about an upcoming project. Because when they go out and inspect, if they see a bunch of contractors out there, there are carriers that will issue a notice of cancellation and have to move the program. So we're very transparent in that process. And again, with just illustrating everything that they're going to be doing proactively to keep their community safe, is able to highlight that in a positive way to underwriters versus a kind of like a reactive kind of way. Like, we're almost too late in the game here. We're now trying to fix all these issues.
There's also many times we've gone in and seen that an association has been underwritten incorrectly. So meaning that the building type and everything like that, as far as the construction type, year built, all that stuff is very important. And so when those are off, it changes the outcome in the underwriting process. I think we got another question.
Yes. Is there anticipated new legislation that will impact the insurance market in 2025? Good or bad? Good or bad?
Well, as everyone knows, the engineering reports is the biggest legislation that has come out that is an impact. And so that still is probably the biggest one that's out there for everybody. Nothing more. The legislation that took place 2 years ago, special legislation that was done, really made some changes that is allowing more capacity come back into the marketplace. And that legislation really had to do with public adjusters and how claims were being handled and how carriers operated in the state of Florida. So the marketplace kind of with anticipation looked at that legislation a couple of years ago and thought positively of it, but they wanted to see kind of what took place. And over the last couple of years, I think that the carriers are seeing that it is a better environment to do business in, and we're starting to see capacity start coming back into the marketplace, which will help with the property pricing.
And that, for those that are not familiar with that term, the capacity word, I mean, every insurance carrier is buying reinsurance, and that reinsurance essentially is what's dictating what they can write, what type of, construction type, age, how much they can write in a given area. And such, and the capacity by these reinsurance, and that's something that we're very involved in, is following that reinsurance market. They are all getting, for the most part, more positive news and saying, hey, instead of saying we can now put up, like last year, we could only put up $5 million on a given risk. Now we can offer $20 million on that risk. So that capacity is a huge item there. And we are trying to stay on top of, as best as possible, any of those changes ahead of time, because obviously budgeting is a very important thing for the associations there. but for the most part, yes, it's been a couple tough years, and there's some light at the end of the tunnel here with significant improvements there. And while I mentioned the property being a vast majority of the spend and where to really bring some value on an association to help, there's other lines of insurance that are extremely important that we consistently find mistakes in. That are, the lower expense amounts with directors and officers and crime, and some associations that don't have workers' comp even without employees to protect from uninsured subcontractors. The umbrella, obviously, general liability is where you can buy a policy for $1 million standard limits, but be riddled with holes with assault and battery and different types of exclusions that these carriers add there. So something we're very in tuned with in order to make sure that we're delivering the best overall program and the best overall coverage.
Another question here, guys. Pre-retirement, this board member, I was the director of business and operations for a school district in Illinois. Many of the school districts, I just moved, belong to an insurance pool to help reduce premium costs managed by an insurance brokerage fund. It saved us significant costs. Is there anything similar to that in Florida, and would it be beneficial to consider, even if it's even allowed here? Sorry.
It's more there are some like risk retention groups on the umbrella side or some different lines of coverage, but when it comes to Florida, statute 718 is the condominium statute, and there's constantly conversations about risk pooling on the property side, but it's a catastrophic state, obviously. So, I write some multifamily apartment types of accounts and in various states throughout the country. And some of those master pools that have a $500 million limit, and they might have a couple $1 billion worth of property within them, they all exclude Florida. They exclude Texas. They exclude these catastrophic states. So on the property side, I think the biggest thing there is really, it's difficult to get around the fact that you need to adequately insure your association, and putting yourself in a pool situation, might not be the best route there, especially for a board member that is volunteering their time and to make decisions on behalf of the association there. So it's certainly a little bit more difficult. Great question there. I was actually just on a call with a nonprofit trust that's being created here in Florida that we're working on a couple of deals in, and it's common in other industries like the school. But when it comes to that significant expense for an association, it's property, it's Florida, and it gets a little bit more difficult there with our wind exposure.
Yeah, that's the only thing. That's a pool program, basically is a shared limit. So you're sharing limits with other folks. So if you have a catastrophic event and there's not enough limit to cover you if it's exhausted. So that's the only downside to the shared limit pool program. But yeah, good question.
There was a comment, so wanting your feedback on this, the best way to coach owners to use homeowners insurance for storm damage and not HOA funds for roof and associated water damage.
I don't know if that's kind of leaning towards, your typical loss assessment situation there, but for any associations, whether you have a 3% hurricane deductible, we have a lot with 2 now, and 5%, you have out-of-pocket expenses, whether you exceeded that hurricane deductible or not. And, we assist with our association clients in that loss assessment route where they decide, let's just say you have a $1 million deductible because you're a very large condo based on your percentage, and you have $200,000 worth of out-of-pocket cost. You're not going to exceed your deductible, but we can assist with the association, helping with the language for a loss assessment coverage, and then using that loss assessment letter to then trigger each unit owner's policy if they have adequate coverage within that. Sometimes we go a little bit further in the approach there to kind of help educate the unit owners that it's not going to be a surprise. If there's a hurricane, we might have to, assess for that kind of to kind of recoup that money and make sure that you have insurance, and make sure you look at that loss assessment limit that you have. And also ask your insurance agent if there's an ability to increase that limit, because it usually is pretty inexpensive if they're able to increase that to a higher limit.
And when it comes to damage for the unit, anything inside, any damage inside the unit owner's condo, that should be triggered to their policy. Anything outside those rules.
Guys, we have 4 more minutes, and the last question we have on here is, can you speak about citizens and their role in 2025? Will they continue to impact the market?
Yeah, I mean, Citizens, as everybody has heard of them, they kind of the market of last resort, and over the past couple of years with the challenging marketplace, did come to a situation in which they were the best available market for specific types of risks. We are quoting Citizens on every account. Our goal is to not put you with Citizens, and if you have to go into Citizens because of the, I guess, the pricing alternatives, it's not forever. It's a temporary thing, but they, it's a necessity. It needs to be here. They've grown substantially, not by choice. They don't want to write your business, but there are some situations in which they are the best. But speaking personally for myself, anybody that I had to put with Citizens, over the past 2 years, because of the market conditions, we've already successfully moved away from them. They're still going to be around, but they have some deficiencies within the program. Obviously, they're accessible. They don't have wind-driven rain. They don't offer key coverage like ordinance or law coverage. There's routes to get kind of an additional policy to kind of fill some of those gaps, but in a situation in which you have an association that has a Citizens option and also has maybe an option that's a little bit more expensive, we're doing our job to coach the insurer to explain why they may want to consider spending a little bit more money and not being in that fund. But we want to provide the information and the options for each association to make that decision. But we're quoting them, but the goal is to not put you with Citizens unless it's really the only route.
Yeah, well, Citizens will play a role, but a much less role than it has in the past 2 years in the marketplace, and that's a good thing.
Mm-hmm.
Citizens is meant to be a backstop to the marketplace, and it served a great purpose the last 2 years. But we see us coming out of that, which is a good thing.
That's a great question, though.
Yeah, we had some good questions. Thank you to everyone who participated. Gentlemen, thank you so much. We look forward to seeing you present on the insurance panel on April 2nd at the Museum of Arts and Sciences. Also, Hyatt Brown is our keynote speaker kicking off the day that morning, talking about the economic growth and the contributions that Brown & Brown and his family have done for our great community. So you won't want to miss that. Austin, will you put your contact information in the chat to everyone so that if anyone has any further questions, they can contact you directly? And then also, everyone, please go ahead and see Brown & Brown when you attend on April 2nd. Thanks, guys.
Thank you.
Thank you so much.
Okay. I'm going to mute you guys. And everyone, we now are going to move on to our final presenter of the day. Thank you all for being here again. I know that I believe I saw Ms. Star Herbig with FCA Insurance. Star, are you with us?
Yes, I'm here.
Hi there.
Can you hear me okay?
We can hear you perfectly.
Perfect.
Thank you for being with us today.
Thank you so much. How's everybody doing today? You've got some more time to talk about insurance, everybody's favorite topic for the last few years. It's been an exciting marketplace. I first would like to introduce myself. My name is Star Herbig. I am the founder of FCA Insurance, which is Florida Community Association Insurance. A lot of you know me from HIG Insurance. I was the owner of that company. And then we sold our personal lines division and continued with our commercial under Florida Community Association. I am a certified risk manager and I have been insuring condos for over 35 years. So I have a lot of insurance experience here, and I know that you just came off of a long discussion with the folks over at Brown & Brown to talk about the marketplace. So I don't want to reiterate and talk about the things that they've already discussed with you. So I think probably what we want to talk about a little bit is the insurance market. The Brown & Brown guys did say that they see the market decreasing, and we do as well. A lot of our clients are experiencing rate reductions, which is great news for you guys. Nobody ever thought that we'd see the market do what it did back in 04 and 05 when the market was very hard. It was very difficult in order to get insurance at rates that were affordable. But there are some things that you can do when you're looking at your renewal policy is first make sure that you've selected an agent that is going to market it properly. And we talked about this just a little bit about how your property is marketed correctly and to the right carriers. One of the things that you can definitely look at is look at your appraisal. You know that under the statute that you have to have your appraisal done every 36 months. A lot of associations really haven't looked at that appraisal. And if your appraisal company just revises what's already been done every 36 months and there was incorrect information in that appraisal, it's going to impact the value of your property. So your value of your property could actually be too high. And what happens if your property value is too high? Your insurance rates are based on that property value. So it's very important to look at your appraisals, make sure that your agent is looking at that appraisal, making sure that the square footage is correct, that the construction cost is correct, and to make sure that the square footage pricing is correct for your marketplace. Because it's very important. We have seen multiple agencies where we have gone and done an insurance review and seen where they've been grossly overinsured and sometimes grossly underinsured. So both of those, it can go either way. One of the other things I want to talk to you about is the roofs, because the roofs, yes, it's a very important thing. Everybody wants to put on a new roof. And yes, when you do put on a new roof, not only are you more desirable for these insurance carriers, but it opens up a lot more carriers that want to write you too when you have the new roof. But one of the things that's coming out that a lot of our associations are being told is if you put a coating on your roof, that's going to qualify you for significant discounts on your policy because it's a new roof. That is not the way the insurance companies are looking at that. Insurance companies look at a new roof is exactly that. When you go and get a permit, when your contractor goes and get a permit, they're taking the roof completely down, going all the way down to whatever your underlayment is, and putting on an entire new roof. It is not having a coating. It's not having a roof put on top of another roof. So those are things that just as a caution to make sure that you're talking to your roofer about, just to make sure that they're doing what they're saying they're doing. We've also seen some roofs where they have been told that they're getting a new roof when they're actually just getting a coating. So one of the things that the Brown & Brown folks didn't really talk about is how the actual bid process works. Because I know everybody's probably interested in how does this work? Because when you go to get a car insurance quote, or you go to get a homeowner's insurance quote, you can call 10 different agents and you can get virtually 10 different quotes. Because everybody, it seems, has different access to different markets. But when you're talking about condo association insurance, it's a lot different because there are only so many markets that are in Florida. So these carriers are inundated with quotes from all the different agents coming in. So they only give quotes to one agent. So what in your role as a board member, the most important thing for you to do is to make sure that you've selected the right agent. Because if you've selected the right agent, that agent is able to go out and can market it to all of the carriers And like us, we also have exclusive markets, markets that other agents don't have. So those are things that we can do that other agents can't do. So we can offer you exclusive markets that have lower deductibles. Also, you'll have better coverage, endorsements with limited exclusions with a lot of the carriers if you qualify. So that's one of the very important things to do. So why is it that they only give quotes to one agent? Well, because since the market is so limited, just think about all of the condos in Florida going just to all these same markets. How would they possibly process that workload? So that's why it's very critical. I think probably a good thing, Diane, now, since they've already been inundated and we don't want to recapture some of the things that are already talked about, is maybe let's open the floor for some questions and answers. I think that would be a good idea. What do you think?
Of course. Yes, absolutely. Okay, everyone, this is a great time to pick Star's brain on all things insurance. Please feel free to put it in the chat.
They might be already tired of insurance already.
It is such a big topic. It is. There are so many facets. We're so thankful to have the team of FCA Insurance, Brown & Brown Insurance, and Insurance Office of America providing a panel discussion at the April 2nd conference, which will be interesting because many will be bringing their questions that day as well. And you'll hear everyone's perspective of different questions, which I feel is a great way to get more information. So don't be shy. Go ahead and put any questions that you have in the chat.
Well, until somebody puts a question, one of the main questions, because you talked about a little bit, they talked a little bit about the going in the risk pool. One of the questions that I get from associations all the time is, well, what if we just decide we want to self-insure? So we don't want to buy insurance anymore because we think insurance rates are too high. So let's just self-insure. Well, in theory, it sounds like a good idea, but most associations don't have enough money to put aside for a major loss. And statute states that you have to insure for replacement cost of that building. So let's just say that you had a $10 million, $20 million, $50 million, $100 million building. You would have to have that much money in the bank in order to pay for your losses. So since most associations don't have that, to go to that next step is really not an option. So being self-insured is not something that really is an option in Florida.
That's a good overview. I had forgotten that question. That had come up before. Anybody else with any questions on insurance?
I think they're exhausted with insurance. It's easy to be, for sure.
Okay, going once, going twice. Star, if you would, please put your contact information in the chat for everyone. We would love for you to also continue the conversation with Star at the April 2nd conference. They have been involved with Southern States Management Group's education program almost since the beginning. Star came to us and said, I want to participate. So we thank you for that, Star. And we appreciate your team and your time today. And anyone else going once, going twice? We will be forwarding the Zoom for the entire day to all of those that are in the Southern States Management Group's database. If you have board members, residents, community association managers that you would like to share the content with, we would welcome that as well when you receive. If you have not signed up for the April 2nd conference, we suggest that you do that as soon as possible. We've already have over 200 attendees that have signed up for that important day where we will have an HOA and COA certification as well. If anyone does anyone have any more questions? If not, we're going to close out the day.
Can you put my information in the chat?
Yes.
Thank
Of
you.
course. Yes.
It's not sticking.
You got it. I am going to go to your contact us page, because then that way everyone can just grab that. And then this will also go into Zoom. Oh, we have a question. We are owner insured. What happens if some owners don't have insurance?
That's a great question. Now, when you say owner insured, you mean as far as a condo unit owner. Years ago, I don't know if you've been living in the condo world for a while, the state came in and required everyone to carry homeowner or carry condo association or condo owners insurance in HO6. But that was very short-lived because it was very hard to manage. So unless it's in your condo docs and your bylaws that they have to have insurance, you can't make someone buy insurance. So you just have to make sure that you're adequately insured. I know that's not the answer that you want to hear, but when you live in a community, everybody needs to insure their own personal space, and then have the liability for things that happen to other unit owners.
Thank you for that question.
Mm-hmm.
Okay, everyone. So that the person that sent that question said that they don't agree.
That you can't make them carry insurance?
We are owner insured. What happens if some owners don't have insurance? And then yes.
Well, unless it's written in your condo docs that that it's mandatory that they have condo insurance, there's not anything in Florida statute making them to carry condo insurance. So if they pay cash for their unit and there's no mortgage on it and there's no one requiring them to carry insurance, there's not any type of law in place to make them carry the insurance. I don't agree with it either, but that's the way that it is.
Okay, everyone. If we don't have anyone late to the chat, we'll go ahead and wrap up today's virtual day star. Thank you so much.
Thank you.
Always so
Absolutely.
good to see you. Thank you to everyone, and be looking out for the video from today to share with others. Thanks, everyone. Have a great night.